What's up, Stephen Johnson? I was just running through my biggest losses of all time, adding the old ones in from like 2018, just because I just wanted to make sure when you make a big mistake, you never ever repeat it. So what I actually do is I'll save the broker charts. I find it much easier to just save the broker charts, because they've got the entry and exit, so I know exactly where I went wrong and how I went wrong. And I thought, well, while educating myself, I should maybe also educate you guys. So it starts off with ZOM. Interesting stock, low float, high volume. Recently, this was like just January 2.4k loss, and if I took this loss in January, like what's the number of the number one, the number two, the number three losses, and I'll just hide myself just for a quick second so you guys can see more clearly. But with this, it's a breakout in this area, and we've had this day, and then this day I was just quite sure it would come down. It's like the third big green day. It's a Carol Baskin pump. I just didn't see it really like doing anything. But the problem is, like, I don't mind like short and pre-market. It looks like it's breaking down, covering, and then I think it's more this again. I don't mind being small size and cutting, and then hitting it a bit harder, because I have got data that says you'll get 20-30% push out of these gappers before they fail. Where this actually went wrong, I was pretty much flat on this trade all the way until the end. It's when this crack happened. I covered, but I sized really hard in this area and then got shook out. And I need to know that with these kinds of stocks, with liquidity, the big dump will be the next day, and the big dump was the next day on this one. Number 9, PPSI. I've lost twice on this. We'll go a bit faster on these because these are some of the smaller ones. But with PPSI, again, I'll have to minimize this. It was like this kind of gap and crap into high volume resistance. It's my favorite kind of short. I think Warrior Trading bought it, and I just got shook out up here. It's just a case of too much size pre-market, adding a bit too early, and then not cutting the loss at high day. I should have been, in reality, thinking I'll ideally play this onto a push, but if I don't get the push in the morning, I'm not adding into weakness, because these can have range when they hit like volume like 150, 160 million, like as it did. Number 8 is PPSI again, 2.7k. This was a different story. This was 52-week high breakout, shouldn't have been in it. Crazy volume, 300 million volume, should have never been in it. You've actually got some kind of like perfect wedge. You can't see properly there, but you've got this kind of perfect wedge that it broke out of, and the fact that I only lost a couple of thousand shorting all the way up this is an achievement in itself. Crazy stuff. When it comes to CLWT, number 7, and again we'll try and go a bit faster here. CLWT, and I think I'll just keep the camera off for now. 52-week high, record volume. It's an older one. This is back in March 29, so like 3k. Like I can have 1-2k days now, but like 3k back in 2019 was hard to recover from. And it's like short and weakness on a you should never be bullish. If you see this 52-week high, as this record volume, I know it's only 17 million, but we're in a different time period. You see this 52-week high, and this is a bullish setup for 2019. So you can't be aggressive on a bullish setup. So like chasing in this area, and I've been seeing this VWAP reclaim for years and years and years now in the squeeze. But I mean, I wouldn't be in it in this area, but I don't mind once it does go parabolic, kind of shorten it into these channels and riding it down. I mean, this would just not be a loss that happens in these days. I mean, if you look PPSI, I would just avoid these days because it's 52-week high volume. PPSI, I wouldn't have chased the weakness down more recently, I don't think. ZOM was recent, and it was a mistake, and that's something I'm correcting kind of now. Number 6, things are getting a little bit more interesting now. LUB. I just moved back to England as trading full time, and it was a 52-week high with breakout volume, and I was just, again, like, it's just too aggressive. I mean, you've got to expect that 52-week high volume when you're looking at this area on the daily, and especially like this break, and it just holds the high of the day all day. I should have just, I mean, the volume wasn't crazy in the beginning. Like, if you try and take it into the open and you cover half and then it reclaims and just holds, like, you shouldn't be in it. Like, you should be done with like stocks like that. Number 5, we're getting quite interesting. This was back in 2018, June 4th, 2018. AETI was the ticker, and ATI is just, again, like, it's I know it's only 30 million, but we're talking a while back, and this was one of the tickers that made me quit trading for a few months. I was like, done. And it's stupid because it's just a really strong multi-month breakout on very high volume relative to the chart, and it ripped out the open, and quite rightly so, it should. And then when it's forming like bullish structures, there's just no way back down for it, and I just got smoked on the way up. There's not much I could have done there. KNDI was a slightly more recent one, July 29th. I've never really took any big losses through drinking, weirdly, but this is definitely one of them that I did. 4.2k is an unacceptable amount of money to be taken on a loss, and it's just a ridiculous reason as well. Again, like, since I've been learning longs, it's such a really beautiful bullish structure, record volume, breakout chart, first green day, news, hot sector. Why I thought it was a good idea to short the area where you would go long is beyond me, and this actually gapped the next day, I believe, as well. So just an absolutely outrageous play, and again, this is something I would long and make money on these days. So that one is what it is. And this was 2018, another trade that nearly ended my trading career. An 8 million volume day on a 40 million float was nearly the end. Feb 1, 2018. It was just a gap and go. And again, if we just take a quick look at the daily, I was convinced that it wouldn't get through this resistance on the daily, but again, when you've got a gap on significant volume and no real chart history, and this is the kind of the run here. I basically chased it down. I shorted weakness, and the amount of times where I've shorted weakness and then it's ripped back up on us and I've lost. It's the fastest way to take a big loss, and it's the cornerstone of all of the big losses kind of that I've taken, apart from KNDI. I had a real problem of chasing price action. I mean, it's chasing at the end of the day. I was chasing. A lot of noobs chase longs. I would repetitively chase shorts down. Didn't want to miss out. Whereas now I've got a much better fundamental understanding of the bigger picture. And even if it goes down, I know, based on experience, chart history, volumes, other signals, higher lows, better understanding the structure of the chart more, I understand that this is probably gearing up for a bigger move, and I'm shorting the squeeze rather than chasing the weakness and being squeezed. So AMD, it's just a straight no-go. And now we're getting into that's AFMD. Now we're getting into really interesting territory. ATOM, I think that was February 2018, and this is May 2018. I took like 3 losses around early 2018 that really kind of nearly blew the account. Like a $4.9 thousand loss is like, it's the end for me. Second biggest loss of all time. So what do we have? We have AFMD and then ADOM and then SHLO we'll get to in a second. But the 4.9k loss, it's again on a gapper, and it's been front side on the gapper. The trend is still very much intact. And I make this mistake. I made this mistake on ZUM as well. Like, I'm making the same mistake 3 years later. It's a very bullish structure, very bullish trend. And again, I don't mind this short. I don't mind, because I see a lot of these collapse. But when it maintains trend, when the structure stays bullish, I'm taking it off. I'm taking at least half off and then adding here. And then when this wedge forms, it's just about reading the technicals. When the wedge then forms, you're out here until you see the crack, and then you're chasing that down, and you've got a good profit. The patterns that worked 2-3 years ago still work. The way I trade now would have saved me in all of the situations in the past, and the situations from the past would have got me in trouble, just the same as they do now. But I think the main changes in the game are, I just don't chase. I've got a better understanding of the structures. I still make mistakes, but they're much less in that I'm not losing $4,000 when I'm taking $100 win trades. Like, if I lose $4,000, it's because like I've messed up, but I can make it back that week. Or I don't think I've ever made a loss that I haven't made back within about 5, 6, 7, 8 days, and I'm just getting better and better and better at these. And then number one, there's a few losses that nearly destroyed my trading career. This is definitely one of them. September 3rd, I'd been back in England about 3 days, I think. Pretty sure September, I'd just come back in England. I'd just started full-time trading. Like, this was the first 3-4 days of when I'd come back home and started full-time trading, from what I remember. And I'd had a couple of like kind of rough, it was the third day I was back in England. So I'd left my job on August 31st, part-time. I'd moved down to part-time for a month, then I went full-time trading in September. Third day of September, I took the biggest loss of all time, 5.2k. And whenever you're trying to prove yourself, whenever you go and trading full-time, I'll never forget Michael Good taking $100,000 loss when he just went full-time trading. I think it was the day that he went full-time, he lost $100,000. And there's like a pressure. Sometimes you're not ready. Like me, full-time trading, I don't think you're ever ready to go full-time. Like you have to not be ready, because then you do like 10, 12, 14, 15 hour days, get tons of market exposure, 10 times more than you would normally get. And then you make the mistakes and learn. But I wasn't ready to full-time trade. I paid for it. I mean, I only lost $1,000 at the end of the month, but it's still absolutely terrifying. And honestly, when you look at kind of the daily, again, it's this fucking sub penny. Like, I'm short a shitload of money on a sub penny. I don't short these anymore. And short a shitload on a sub penny, get squeezed all the way up. Luckily, get out a lot of it on the dip. So I'm down like a couple of thousand at this point. I'd try and save it and hope, but sub pennies are very unpredictable, very hard to judge. I think this went higher the next day as well. In fact, did go higher. I was in it. So I tried to add, was squeezed all the way up here to about 4 or 5 grand. And then the next day I just cut it for the 5.2k. Like, I swung it overnight down 3,000 or 4,000. Didn't get any better. And then I had to cut it for like $5,200. So that's a wrap. The trade's pretty crazy. And again, like, what are the learnings from this? I think we've kind of covered them. It's don't short sub pennies. Be aware for stocks squeezing on you. Make sure you're cutting half, if not full size, to get back in for the squeeze. And be very aggressive on bearish setups, and be very bearish on very bullish setups.